top gold price drivers. You are watching this video now because you are wondering, is gold a good investment, especially now? With so many shiny investments taking up our attention and creating a fear of missing out, why gold? There's a myriad of reasons to invest in this 5,000-year-old safe haven asset. Ask any wealthy investor and they will tell you. With prices still elevated, high interest rates, and the mounting national debt, the present and future purchasing power and cost of living of everyday Americans is more and more uncertain. If you think that you may be falling short of your retirement goals, see the link in the video description to the free inflation and retirement calculator. U.S. fiscal uncertainty, the U.S. national debt. At this present rate, the U.S. is adding $2 trillion to its debt every year. To quote Mark Goldwine, Senior Vice President at the Committee for Responsible Budget Management, if we keep adding this much to the debt, in good times, things could get really awful in bad times, and we can't grow our debt faster than our economy forever. To this point, the United States debt-to-GDP ratio is 123%. This would require a lot of economic growth to overcome. Furthermore, the interest expense alone on the debt is projected to be $1 trillion or more at the present interest rates, creating what is known as fiscal dominance. Remember that term. You will be hearing more of it as the year goes on. So how exactly does that affect gold prices? We are getting to that. The real question is, how will the government pay for all this debt and interest? Balanced budget? Given the spendy culture in DC, not likely. Will either political party raise taxes in order to bring this budget into balance? Not if they want to get re-elected. Who will pay the piper? This expense, as always, will be passed on to present and future generations through inflation, the invisible tax. Inflation is taxation without legislation. According to the data provided to us by the same spendy government, inflation has been going down from its 9% peak in 2022. Many Americans are still recovering from the losses experienced during this period, and the Federal Reserve's aggressive hiking policy to counteract this inflation that they initially thought was transitory has only increased the cost of debt and the interest lending burden on ordinary Americans, adding insult to injury. It is largely believed that the Federal Reserve has ended their aggressive interest rate hiking campaign. Interest rate cuts usually weaken the strength of the dollar and send the price of monetary metals like gold and silver up. The value and price of gold is inversely correlated with the strength of the dollar. It is worth pointing out the obvious, that prices are still rising just at a slower pace. The Fed's 2% sweet spot inflation target, as measured by the fairly dubious government data, still equals, at best, a 2% erosion of your wealth and retirement savings year over year. Imagine your doctor telling you your health is declining at 2% per year, not improving. Good job. Suffice to say, 2% inflation is just enough loss of purchasing power and currency depreciation to go relatively unnoticed. Whether you earn a paycheck, dividends through stocks, interest through bonds, or any other income stream, once you get past the tax payments, capital gains, and other administrative costs, you are still experiencing, at best, a 2% loss in wealth due to inflation. Gold investing plugs that hole by providing portfolio diversification. Gold acts as a hedge against your losses in other income channels caused by the uncontrollable burden that is inflation. Gold also appreciates in price the longer you hold it. The reported measurements of inflation are one thing. The average lived experience by the regular everyday American is another. Please kindly leave a comment on your personal experience with the cost of living and its effects on your day-to-day behaviors. Remember, your retirement savings are also dwindling at the same time. Gold has demonstrated its undeniable value. Physical gold is not just a timeless asset that can diversify your portfolio, hedge against inflation, offer stability in uncertain times, and build wealth while preserving it. It has history to back it up. I would ask the viewer to name one asset that has a 5,000-year record for withstanding every economic business cycle, outlasting every faith-based fiat currency, stock market booms and busts, global conflicts, and continues to appreciate with time despite the numerous headwinds and attempts to manipulate its price. Gold holds a proven, time-tested track record as an economic constant that spans millennia. Why is it important to have an economic constant? What is the main question every person planning their retirement or building a business need to ask themselves? Are we growing wealth or are we losing wealth? And how do we measure this? Gold is that tool. Unlike stocks and bonds, gold isn't positively correlated with other assets. This characteristic alone makes it an excellent diversification tool for your portfolio. When other assets tumble, gold often holds steady and even appreciates while providing a safety net during market downturns. It is essentially wealth insurance. The value of gold isn't limited to its monetary role. It's a tangible asset impervious to fire, water, and time. As a commodity, it doesn't require feeding or upkeep like livestock or property would. This makes gold a hassle-free investment that you can store safely and securely, free of worries of depreciation due to physical wear and tear. Gold is often called a boring investment. Yes, we completely agree. It's an asset that is drama-free, low maintenance, continues to appreciate the longer you hold it. It is essentially wealth insurance that builds wealth along the way. Set it and forget it. That being said, investors obsessed with day-to-day price action or chasing the latest shiny object usually do not find the allure of this asset. Hence, gold is for long-term holding. An often used criticism to holding gold is the opportunity cost of gaining yields elsewhere, such as bonds or high-quality equities. Monetary Metals is a company that unlocks the productivity of gold by offering a yield on gold paid in gold through the company's gold fixed income investments, which aim to provide a fixed return with low risk of loss. This provides investors exposure to gold's unique attributes, plus a real yield that grows total gold ounces held. To learn more about Monetary Metals investment products, see the link in the video description. Furthermore, gold, more specifically physical gold, has no counterparty risk. It doesn't rely on someone else's promise or ability to pay. What you see is what you get. Its value doesn't hinge on a company's performance, a government's stability, or the whims of the global economy. Unlike fiat paper currencies that are essentially listed as liabilities on a central bank's balance sheet, gold is no one's liability. In a world of volatile markets and uncertain economic outlooks, gold stands firm. Its undeniable value has been proven time and again throughout history. So when you're planning your investment strategy, let history be your guide. We will explore the next driver that will push up the price of gold in the next video. Be sure to subscribe to this channel so you don't miss it. If you're ready to get started on your gold investing journey, see the links to the free guides in the video description. If you have $100K of retirement savings to protect and want to take advantage of the best volume prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.